The tax return deadline, a last-minute push with just 2 weeks left until the tax return deadline. Individuals are advised to take immediate action to avoid any potential penalties or fines. HMRC has emphasized the importance of submitting tax returns on time, highlighting the consequences of non-compliance. Understanding the consequences of non-compliance failure to lodge a tax return can result in penalties and fines, which can be substantial. In some cases, individuals may be required to pay additional taxes, interest, and penalties. Non-compliance can also lead to reputational damage and potential loss of business licenses. ###a last-minute push *, a last-minute push with only 2 weeks left. Individuals are urged to take immediate action to avoid any potential issues. This includes checking tax return status and ensuring all necessary documents are in order. Reviewing and updating tax return information to avoid any discrepancies. Submitting tax returns as soon as possible to avoid any delays. ###Key takeaways * Key takeaways. The tax return deadline is approaching quickly, and individuals are advised to take immediate action. Failure to lodge a tax return can result in penalties and fines, and non-compliance can have long-term consequences. Taking proactive steps to ensure tax return submission on time can help avoid any potential issues. ###example. Avoiding penalties with a proactive approach * example. Avoiding penalties with a proactive approach. Consider the case of Sarah, who failed to lodge her tax return on time. She received a penalty notice from HMRC, which required her to pay a substantial fine. However, Sarah took proactive steps to rectify the situation, submitting her tax return and paying the outstanding amount. Tax filing deadlines for self-employed individuals. As a self-employed individual, it's essential to understand the tax filing deadlines to avoid any potential penalties or fines. In this article, we'll delve into the tax filing deadlines for self-employed individuals, including the online filing deadline and the paper filing deadline. Online filing deadline. For those filing a tax return online, the deadline is midnight on January 31st. This applies to the fiscal year ending April 5, 2024. It's crucial to note that this deadline is specific to online filings, and paper tax returns have a different deadline. Paper filing deadline. Paper tax returns were due by October 31st of last year. This means that if you filed your tax return on paper, you had until October 31st to submit it. Understanding the self-assessment process. If you're new to self-assessment, it's essential to understand the process and what's involved. Self-assessment is a way for individuals to report their income and expenses to HMRC, Her Majesty's Revenue and Customs, and pay any tax due. This process is usually done online, but you can also use the paper form if you prefer. Key steps in self-assessment. Registering for self-assessment. This involves creating an online account with HMRC and registering for self-assessment. Gathering necessary documents. You'll need to collect your P60, P45, and any other relevant documents to support your tax return. Completing the tax return. You'll need to fill out the tax return form, which will ask for details about your income, expenses, and tax payments. Paying any tax due. If you owe tax, you'll need to pay it by the deadline to avoid penalties. The importance of notifying HMRC of a lost or unwanted tax return. If you have filed a tax return and no longer need it, it is essential to notify HMRC. This is not only a legal requirement but also a matter of personal responsibility. Failing to notify HMRC can lead to serious consequences, including penalties and fines. Why notify HMRC? You must notify HMRC if you no longer need a tax return. HMRC must agree to this before the tax return submission deadline on January 31st. Failure to notify HMRC can lead to penalties and fines. ###The consequences of not notifying HMRC. HMRC may impose penalties and fines on you. Missing the deadline can cost you £100 plus £10 a day. The consequences of not filing a tax return. Failing to file a tax return can have serious consequences, including fines and penalties. HMRC takes tax compliance seriously, and the consequences of not filing a tax return can be severe. The fine starts at £100 for the first 3 months of non-compliance. For every month after the initial 3 months, the fine increases by £10 per day. The fine can add up quickly, making it essential to file your tax return on time. The importance of filing a tax return. Filing a tax return is not just a legal requirement, it's also essential for your financial well-being. Here are some reasons why filing a tax return is crucial. Tax refund. Filing a tax return can help you receive a tax refund if you've overpaid your taxes throughout the year. Tax credits. You may be eligible for tax credits, such as the working tax credit or child tax credit, which can help reduce your tax bill. National insurance contributions. Filing a tax return can also help you claim back any overpaid national insurance contributions. Hashtag how to file a tax return ***. How to file a tax return. Filing a tax return is a relatively straightforward process. Here's a step-by-step guide to help you get started. Gather your documents. Collect all your necessary documents, including your payslips, P60, and any other relevant paperwork. The impact of late payment interest on individuals and businesses. Late payment interest charged by HMRC can have a significant impact on individuals and businesses alike. The interest rate of 7.25% is a substantial amount, and when compounded over time, it can lead to a substantial increase in the amount owed. The interest is calculated daily, and it is added to the original debt, making it even more challenging to pay off. The interest rate is not just a simple addition, it is a compound interest, which means that the interest is calculated on the new total, including the interest already added. HMRC will consider these as reasonable excuses for late payment penalties. Understanding the late payment penalty. The late payment penalty is a fine imposed by HMRC for failing to pay your tax bill on time. The penalty is calculated based on the number of days the payment is late, and it can be a significant amount. The penalty is usually calculated as a percentage of the tax bill, and it can range from 1% to 5% per month. Types of late payment penalties. There are several types of late payment penalties, including late payment penalty for failing to pay on time. This is the most common type of penalty, and it is calculated based on the number of days the payment is late. Late payment penalty for failing to pay in full. If you fail to pay your tax bill in full, you may be charged a penalty for the full amount of the tax bill. If you are unsure about the time limit for appealing a penalty charge, check the HMRC website for the most up-to-date information. Appealing a penalty charge with HMRC SA Form 370. Understanding the appeal process. Appealing a penalty charge with HMRC can be a complex process, but it's essential to understand the steps involved to increase your chances of success.